Hi, I'm Simeon Wallis, Chief Investment Officer of Aprio Wealth Management, and welcome back to The Pulse, where we take a month-to-month look at what happened in the economy and the capital markets so you make better decisions in your business and with your investments. Let's start with the highlights. Markets are still strong, though gains may cool off in the short term. And the economy keeps surprising to the upside, even with slower hiring. And while inflation is sticking in goods, expectations are still in check, keeping rate cuts on the table for September. Now, let's take a deeper look at this data, see what else we can learn. Globally, stocks are climbing in July and pushing up year-to-date returns. But the big story is how broad this rally has become. Developed and international markets are up nearly 20%, while the NASDAQ and the S&P 500 are up about 8%. Meanwhile, bonds are mixed in July as the market weighs inflation data, yet they are up a healthy 3 to 5% for the year. Now, oil is higher in July, yet remains down for the year, while the strength has been in copper, which is up nearly 40% this year, and Bitcoin up 25%. Historically, when the first half is strong, the third quarter tends to take a breather in the markets, and that's what we've seen on average over the last 10 years. This potential third quarter slowdown isn't a red flag. It's more like the market catching its breath after a sprint. Looking beyond the third quarter, over the last decade, markets on average have rallied into the new year. Now, what's encouraging is that analysts are finally revising earnings expectations up again for Q2 and the second half of the year. This supports the idea that the economy is still expanding, even if we're not in boom mode. The good news is it's not just the big guys. Analysts analyzing smaller companies have started raising estimates off recent lows. Now, that tells us that the market has moved beyond the worst-case scenario for tariffs. In fact, we've seen a sharp turnaround in economic news relative to expectations. The data is coming in better than economists were predicting, and that's giving the markets a bit more fuel. Even with the improving data, many CEOs are signaling that growth, while still positive, is moderating. From credit cards to airlines, we're seeing decent demand and in some cases an improvement as there's more certainty in the economy. Small businesses are often the engine of the economy, and while confidence has come off the highs, it's still holding in a relatively healthy range, in line with the period before the pandemic. Now, that suggests that many business owners are cautiously optimistic, and so they're not pulling back. Consumers may not feel fantastic, but sentiment is no longer falling. It's bottomed and it's started to tick back up, and that matters because consumer confidence tends to lead consumer spending. And right on cue, spending is still happening. Big drivers of the recent increase in spending have been Amazon Prime Days, auto dealerships, and summer travel. And that's helping keep the economy growing, even if it's at a slower pace than earlier this year. Now, that spending is occurring despite a tepid job market outside of healthcare, where the economy is adding jobs, but at a slower rate than the years before the pandemic. But as we just saw, consumer spending hasn't fallen off, which tells us that households and businesses are cautious yet optimistic about the economy. That cautious optimism is evident in real-time data from Indeed.com, as we're seeing recently a slight uptick in new job postings. And that's a good sign that companies may be preparing to hire again, maybe not as aggressively, but enough to support continued economic activity. Now, while the inflation data has trended in the right direction, the recent inflation figures were a disappointment, as it's not falling as quickly as hoped. This is especially true in the prices of manufactured goods, which are here in purple. The tariff impacts are starting to show up here, and it could be a headwind in the months ahead. Now, a big part of what's driving that increase in inflation, imported goods. Coffee, electronics, and toys are jumping in double-digit price increases, and that's likely tied to new tariffs starting to flow through the system. To sum up everything from today, here are the key takeaways. The economy remains resilient, even if things are slowing down around the edges. And markets may pause, but the data keeps surprising to the upside. And while inflation in goods is a concern, it's not derailing the broader outlook or the path towards lower rates. With that, I'm Simeon Wallis, Chief Investment Officer of Aprio Wealth Management, and I'll see you next time with our next edition of The Pulse.